All right, everybody, welcome back to the channel. Today we're going to give a brief overlook on what exactly happened this past week. I know I was pretty bullish last week about us going towards the upside, but I did entertain the levels that we had down here as well, around $56,000. And I said it was a possibility that we was going to come back through and sweep this little, just get another little tap and then come back up. That was my expectations, was for a downpour, but not this far. Golly, we came all the way down to 50,000. Luckily, we bounced right back out of this little green little pocket demand zone right here. Bounced right back out, and we're just waiting to recapture this area. This is really heartbreaking. I'm not gonna lie to you guys. But we're going to go over exactly what happened. And there's four things that basically destroyed the market this following week. And we're going to go over them one by one. Firstly being, boom, Japan bank rate increase. Japan has a 0% policy on their bank loans. You can just get money basically for free out there. And what they was doing is the Japanese, they was getting their money from the bank at pretty much for free and then transferring it over to US assets. And so when the bank increases rates, that mean they had to pull their assets and transfer them back into cash just to transfer it back into the yen just so they can pay their fees. And the banks increased it for pretty much about a week, realized how stupid it was because everything was crashing. Bitcoin crashed, Nasdaq crashed, S&P 500 crashed. The yen went up in value compared to the United States dollars, but even the Japanese market crashed. So they instantly turned it back to a 0% rate just to fix what it is that it was about to really fuck up. Man, it was about to get really, really nasty over a longer period of time, but they seen where they messed up at, man, quite early. Thankfully for us. Now, this took place on the 31st of July. So there is a lag period when it comes to, for one, when it comes to information such as Japan's bank rate increase, along with it actually affecting the market. On top of that, in the United States, we also had the high unemployment rate that was announced when, what day is this on? The 2nd, August the 2nd. I can't even see because it's so close together. It was released on August the 2nd. So these things was back to back. First, the Japanese banks messed us up. We felt it a little bit later. On top of us also getting high unemployment rates from the government, telling us that more people are out of jobs right now. More people are filing for unemployment, and it's not. I mean, see, that's a gray area. I'm not gonna lie to you. The government wants unemployment. They do, but just not that high, which is really stupid. Like, they want unemployment, but they want it at a certain and controlled level. It's almost the same as them saying they got a 2% inflation on goal. That's their post right there. You still want to deflate the money by 2% no matter what. That's your goal, even though you're overshooting it right now. Yeah, completely stupid. I don't necessarily understand it, but hey, this is the society that we was born in. So we got high unemployment rates. Everybody's thinking there's about to be a recession in the United States, which made them sell a lot of their assets to revert it into cash for a safe haven. But the funny thing is, even the dollar fell. Like, everything fell. Man, it's crazy how all these things are really interconnected with each other. Third thing being the long liquidations. Market makers also seen this as an opportunity to just completely sell everything. They sell everything, announce that they're selling everything so that everybody else can sell everything, and then they go right behind everybody selling all their stuff, making price go down, then they buy it all up, liquidating all the long leverage that some of the people had in this zone right here, which never got liquidated even through this last little deviation crash that we have. Now, this is a little bit something more serious, and they came and liquidated all those loans, which was, I believe, like I forgot that. I should have pulled up the information when I had it. I promise you. It was like $1 billion or something like that. $1.1 billion of long liquidation. Like they got liquidated. Crazy. People really out here playing around with a lot of money when they shouldn't be. When they shouldn't be. Last but not least, this war that's happening in the Middle East. Whenever it's war, is good for the markets, don't get me wrong, but it is very, very volatile. Very, very volatile, which typically means they'll also be volatile and towards the upside once things really get going and they start printing off money to fund the war to help stimulate the economy. More people need unemployment, meaning they need to put more money into the economy itself to just pump it up for everybody to benefit off of. It's going to be a rough ride, but only thing I can say is hold until the end of the bull run. It is a 4-year cycle. I think we like I've been saying, we get too caught up in just a small time frame of it. This how long is this since we've been in this little range right here? 147 days. Just 147 days. Not even a year. It's just a little bit more than a third of a year. It's not that serious, y'all. It's not. It's not. You gotta let's get a better picture of this. You gotta look at the big picture of this. Where are we going? What are we talking about here? We're going to the upside, nonstop. We're just on. It's just a little turbulence. That's all. You look at every market. We have turbulence. Have moments where we just move sideways for a while. Then we blast up. Move sideways for a while. Then we blast up. It's the same. It's the same thing. It's all it is. Don't sell your bags. It's not over yet. I don't know who out here trying to do that, but come on, you can't look your kids in the eyes and say you didn't have no balls when the time really counted, man. That's all I got to say.